McDonald's 2023 annual report, and we're going to use this as an example to go through some foreign currency, some real life foreign currency gap activity, along with some hedging activity as well. I'm going to keep it light on the hedge activity. This is not a hedge accounting video, but foreign currency in this 10K is really tied to hedge accounting. So let's dive into this. So we're going to go to page 16, which is really page 11 in the annual report. I'm using the PDF numbers, not the annual report numbers. This is our first example of foreign currency exchange rates. It doesn't tell us a whole lot, so we're going to skip to the next page. Now, this next page is letting us know what impact to the financials certain currencies had. They're saying a strong euro, a strong pound, and a weak dollar did have impacts to the overall results. They're also acknowledging the local currency. They try to transact in the local currency as kind of a natural hedge. Local currency, for example, is the primary currency in the country. So if you're in the UK, the local currency is going to be British pounds. And what they're saying there is with a UK entity, when they're buying items or they're selling items, they're trying to do it within the local, or they're trying to use pounds. So you're not converting dollars, not converting euros. There's no foreign currency impact to your transactions. And this is their first example of hedging activity. They're making a reference that they do hedge their foreign currency cash flows and their foreign currency exposures within the financials. And they have this other concept that is called the constant currency. It's not a gap compliant item within the financial statements, but a lot of companies do this because they want to compare apples to apples. They want to use a weighted average currency translation from the prior year and also apply it to the current year. So you're using the same foreign currency translation on both years. Now, GAAP, they don't want you to do that. They want you to follow what the GAAP accounting says. For example, a lot of your balance sheet accounts are going to be at the spot rate of the financial statement. So a lot of these are going to be 12/31/23. Same with income statement. They want the weighted average either for the month or for the year. They're saying here for this constant currency analysis, net income increased by 37%. Again, not GAAP compliant, but they want that apples to apples note to put in the financial statements. Page 28, McDonald's is letting you know that 38% of their debt in 2023 was in a foreign currency. And then we have a footnote that is acknowledging that they use derivatives, they use hedging activities to hedge their debt. Nothing crazy. They said it's all over-the-counter instruments. And in this footnote, that foreign currency denominated debt was $15.1 billion on the financial statements. Page 29 is giving us some information on what type of assets, or specifically what type of currency that McDonald's is holding translated to dollars. So they have $1 billion of pounds, they have $1 billion of Australian dollars, etc. They're just acknowledging, hey, based upon the currency that we're holding, converting it to dollars on the balance sheet date, this is what it is worth. Also within this note, they're doing a sensitivity analysis to model hypothetical changes in foreign currency values, specifically a 10% fluctuation in foreign currency rates. And they're acknowledging that a 10% change in foreign currency rates would not have a material impact to the company results in 2023. You're going to see this a lot of times in big publicly traded companies with a lot of foreign currency exposure. They want to do sensitivity analysis to get a sense. If you have some wild foreign currency fluctuations, will it have a material impact to the results? Page 44, the consolidated statement of comprehensive income. This is where you're taking net income and you're layering those items that don't necessarily end up on the income statement. They end up in equity, but kind of relate to the results of the year, or the results of McDonald's for that particular period of time. And there's a lot of foreign currency activity, a lot of hedging activity being referenced here. This first line item mainly relates to the foreign currency translation adjustments. A lot of times this is going to be when you translate your foreign subsidiaries to the reporting currency. So you're taking the functional currency of a subsidiary, you're converting it to the reporting currency. In this situation, it's dollars. And when you do that, you just end up with this, for lack of a better word, plug amount that you need to adjust for. Otherwise, the balance sheet does not balance. The sub doesn't balance, and when you try to consolidate the sub, it doesn't balance either. This is because when you're translating balance sheet items, you're translating them usually at a spot rate. Retained earnings is going to be this weird weighted average, or this accumulated weighted average approach. If you have any Additional paid in capital, that's going to be going back to the historical rate. So you're never going to have this fully balancing translated subsidiary. And the way that you make it balance is you make an adjustment to other comprehensive income, which is considered a foreign currency translation adjustment. Below that, we have cash flow hedges. This is the result of hedging activity. With hedges, your goal is really not to make money. You're not trying to make money. You're not trying to lose money either. You're basically trying to net your exposure to zero if you do a good enough job with it. And you're never going to be perfect with a hedge. You're never going to time foreign currency exactly. You just want to get as close as possible to zero. And sometimes you end up with a loss, and sometimes you end up with a gain. And in this situation, they had a little bit of a loss from their cash flow hedging activity. And these are going to be hedges that receive hedge accounting. And hedge accounting is a special type of accounting treatment that doesn't reflect the foreign currency gains and losses on the income statement. They're all reflected on other comprehensive income. If a derivative or a forward contract does not get hedge accounting, it's going to be reflected in the income statement. So it's going to be reflected in net income. So that net income number that we're starting with has that impact already in it. These are the items that actually receive hedge accounting, and you have to meet certain criteria, like you established a hedge relationship. You had a highly effective hedge. You're within 80 to 125% of the exchange rate. The nature of the risk is documented, and you're achieving certain economic objectives. These are requirements that you're going to need to document and prove to ultimately receive hedge accounting. Hedge accounting is very complicated. That'd be really hard to go over in this video right now. Hedge accounting deserves its own video to go over, but I'm just acknowledging here's some surface level items related to foreign currency hedge accounting. Cash flow statement, quick reference. This is the effect of foreign currency rates on cash. Page 48, we're just getting a straight definition, or a very simple definition, of the functional currency. And they're stating the functional currency of operations outside the U.S. is the respective local currency. So we have these terms, local currency and functional currency. A lot of times they're going to be the exact same thing. Functional currency is the currency that the entity is transacting in. So if you have a Canadian entity, more than likely it's going to be transacting in Canadian dollars. That's going to be the functional currency. It's also going to be the local currency. The local currency is Canadian dollars. The business, the subsidiary, is operating in Canadian dollars, so they're actually the same. The functional currency then gets translated to the reporting currency when you roll up that subsidiary to the overall consolidation effort of McDonald's, which is reporting in US dollars. All right, page 52, a lot more information on derivatives. I'm just acknowledging it here. We're not going to go through this in this video, but there is a lot of detail if you want to look into this on fair value hedges and cash flow hedges, and then also going into the difference between a net investment hedge and undesignated hedge. These are going to be hedges that get hedge accounting, and these are going to be hedges that do not get hedge accounting. And our last piece of information in the 10K is going to be page 63. This is going through a little bit more detail on the debt and what different currencies that debt is in. We have debt in euros, Australian dollars, British pounds, Canadian dollars, Japanese yen. These are different debt instruments, whether it's floating, whether it's fixed interest. These are debt that is held not in dollars and ultimately gets converted to US dollars on the financial statements, but is actually held in a different currency. All right, that's McDonald's annual report for 2023. We have a lot of foreign currency activity within this 10K. We also have a lot of foreign currency hedging activity within this 10K. I hope you have a good rest of the day, and I will see you in the next video. Take care, and goodbye.